Our mission at SD Bullion is clear: the lowest cost gold and silver available online. While we do not have pretty blue boxes, free shipping on every order, or glamorous gold and silver infomercials, SD Bullion has the lowest prices that may save you hundreds on your next order. So before you make your next investment, do the math and join the over 40,000 new customers who have recently made the switch to SD Bullion. Why pay more?
Hey everyone, this is Elijah Johnson with SilverDoctors.com, and back with us today is silver expert David Morgan. David, thank you so much for joining us today.
Yeah, Elijah, it's always fun to be with you. Thanks.
Now, I'd first like to discuss the precious metal markets. It's been about a month since we've had you on, so if you wanted to give us an update on the precious metal markets, and obviously today's price action hasn't been very positive for the metals.
Well, it has not. I just finished an update for our premium members where I go through a lot of things. Primarily on this update I just finished before our interview was today's price action. So it's Monday, the 3rd of July, just for the record. And we're off as we speak, and there's 4.5 hours left in this trading day. Gold's off about $20, silver's off about 50 cents, platinum's off 16, and palladium is basically flat. So we've hit a double bottom in silver, which is 16.20, and gold about the same, about 12.20, and platinum I don't pay as much attention to, although I'm not sure, the 908 level is, fairly low. So I don't know the volumes yet because we're in the middle of the trading day. However, this is very typical of a light volume day, which means whenever you have these 3-day holidays, I learned the hard way really early on when I traded futures very regularly, that you don't want to hold a position over a 3-day holiday. And of course, I know it's not a 3-day holiday for some of the markets. Obviously, the market's up and running today, but what that means is a lot of people are not trading today, so the volumes are light, which means it's a lot easier to spend $1 to move the market down as it would be in a more robust market when all participants are available to buy or sell.
Definitely. And one of the things that you've said in the last couple months, how it seems like the silver market is set up for a massive short squeeze. Do you still see that?
No, that's gone by. Certainly was. And I was the only one saying it. There were a couple others. I think Ted Butler did quite a large article about that. And, I also said, even though it was set up for that, statistically, it favored a pullback, even though it looked as if, the potential is there. I mean, that's undeniable. A fact is a fact. Regardless of the facts, the propensity was more of the same, which means it seemed more likely to be a pullback than an explosion up. But I didn't want to be on record as saying, we're at the top. It looks like, based on commitment of traders, we're for sure going to get a pullback, because it was that trigger point. I mean, if I had, been with a major trading house and they had plenty of funds to devote to that particular market, it could have been triggered to the upside fairly easily because of the setup. That setup no longer exists.
Now, you were recently on the Wall Street for Main Street podcast, and you were talking about how really in the precious metal sector, you're seeing the worst sentiment pretty much you've ever seen, or at least recently. What is your perspective on why this is? Do you think it's just because it's, the summer and precious metals seem to go down in summer? What is your perspective?
Well, that's part of it. The summer doldrums are pretty well known. I remember, again, when I first started trading futures avidly, and, I was such a gold bug, and I, knew a lot of fundamentals, and I just couldn't understand why, with these headlines that were coming out sometimes during the summer months, gold wouldn't react. And of course, I learned by making mistakes, and there's a very big lack of trading in the summer months due to a lot of people that are in Europe that take these extended vacations. There really isn't any, wedding season in India, that type of thing. So really this summer doldrums is something that you learn fairly quickly. And that's been the case. But above and beyond that, going back from a long-term perspective, and I've said this before, Elijah, but, once we broke the $26 level to the downside and $15.50 level in gold to the downside, that basically was the end of a lot of the hardened belief that we were in a major bull market and it could only go up. And since that time, which has been several years back now, we've basically seen more and more people leave the market and sentiment get worse and worse and worse. 2016 brought back some pretty positive sentiment and was a good year if you could trade it, which we did. And it wasn't a bad year if you just bought in 2016 and held to December 2016. I mean, even in that time frame, the precious metals mining shares were one of the highest rated, according to Investors Business Daily, on a year-over-year basis, which means, January 1st of that year to December 31st of that year. And it was good. But this year has been a very choppy market, and a lot of people have left the market. A lot of people that are holding on are just worn out. They just really are more or less giving up, at least psychologically. So I probably over-talked it, but that's the way it is. And these are bottoms, Now, is it the bottom, day after tomorrow? No. I think the summer is going to remain dull to down. And just a shameless plug here, I think, if you're really interested in the market, you may consider going to themorganreport.com, giving me a first name and a primary email address, which we have to verify. And you can get the free, price projection for 2017. And I think that's a good basis to start, especially if you're long-term bullish this market, what to expect for this year, because I'm pretty realistic about what I see for this market. And I wrote that, whatever it's been, 6 weeks ago or whatever. My opinion hasn't changed, and the market's basically playing out fairly much along the lines I expected.
You're thinking that precious metals could go lower. How low do you think they could go?
Well, I think right now we're potentially at a double bottom in silver, 1620. And so if it holds here today, then we might get a slight move up. And I'd have to see the volume to get more data. If it was a weak, move up, a dead cat bounce, as Jim Dimes refers to it, then we might get a real good quick trade if you're really nimble. I'm not going to bother. It's really too treacherous, in my view, to trade that. However, I expect that's probably what will happen. And then the more likely case after that is to retest that 1620 and see what happens. And if it holds, then we've got good data. If it doesn't hold, which is fairly likely, then we're probably going to have to retest, the $16 level and see what happens. I doubt we're going to see the 2015 lows that we saw. We're like at $14 silver. I don't think we're going to see that again. But there are others out there that do think that we'll breach those lows. And I certainly won't say we won't, because I've often said, and probably people are tired of me saying it, but the market knows more than anyone. Regardless of how it got there, manipulated or not, algorithms or not, quants or not, it doesn't matter. The fact is that markets do what markets do. There's all kinds of input to markets. Most markets are based on these trading algorithms now. They are all manipulated in my view, but they are still the markets.
Now, one of the things I'd like to also discuss today is the precious metal mining sector. Now, you've recently reported on new precious metal mining stock that is kind of like actually basically mining from electronic waste, and it actually gets a lot more precious metals out of the tonnage that they mine from, or the gold or electronic gold ore, you could say. Can you tell us a little bit about this?
Well, it's been something that I've looked at for a long time. In fact, again, going back in time when I was with the Mining Bureau in China, I mean, one of the things that they asked me more about than any other real area was the recycling and how much silver is recycled. And they've got a huge population and they don't really want to waste anything. And of course, the electronic waste was really great for the silver side of the equation way back when we had, silver halide film. I mean, a lot of people made a lot of money by just taking, the solution that was basically toxic, and sometimes they were paid to take it away, and then re-refining it back into silver. So that was a great industry. And since then, it's changed rapidly from silver halide film to digital, as we all know. And that part of the recycling business has basically gone away. Yes, it still exists, but to a much minor degree. And what's replaced it has been the electronic waste, which is primarily printed circuit boards on the aggregate, but there's many other types of electronic waste that are really higher value than even a printed circuit board. So this has become a great recycling industry, and very few are aware of how much recycling really takes place. In silver, you're looking, depending on which study you look at, and they vary between the Silver Institute and CPM Group, but as high as 200 million ounces a year. I don't think it's that high, and we explained that in the last Morgan report, but I don't want to quibble about the exact amount. What I want to make very clear is that it's a large amount is recycled. This idea that, all silver is used up is a fallacy. A lot of silver is used up and goes to the landfills and never returns. However, there is also a great amount that is recycled. So it's a very lucrative business. The problem with analyzing that business is what is the flow rate? In other words, if you can extract gold at, let's say, $400 an ounce all in sustaining cost because you are a recycler, but you only get an input of 1 truckload of gold per year, you have a pretty small business, even though the setup is capital intensive, costs money to get this, set up to recycle, whether you do it by fire, whether you do it chemically, whether you use both or some other method, electrowinning or whatever. So the company that I have been pretty, that I've mentioned quite a bit in these type of interviews is one that I believe and know, and I can't say much publicly because it has to be public knowledge or publicly disclosed before I can say much more, but you want something that you are going to get a lot of throughput. You have got basically the market as far as printed circuit boards. If you have got a company that has 80% of the printed circuit boards, I'm just throwing out a number. I want to give the idea. I'm not saying this company has 80%, but it's got the lion's share of it. Then you can scale up the business and make a lot of money because you've got a huge margin between $400 and let's say $1,200 gold. However, if you're a company, so it's very equivalent to thinking of about a Newmont Gold or a Anglo American, one of the top tier cash rich companies that we've written about in the Morgan report. You're comparing that with a junior explorer or a junior producer. Let me say producer. So in one case, you're producing precious metals, but you're producing it at a small rate. You're producing, several, a couple 100,000 ounces of gold, let's say, versus a company that produces in the millions. So that's kind of the equivalent. So you want a company that can produce a lot. And that's something that's not really mentioned in the analysis. It needs to be mentioned because even though the margins might be high, it'd be great to have a mom and pop store that produces, these high margins. But you're basically, in a strip mall and you have one store and everyone lives a good life because you employ your own family, and that's good. But on the other hand, if you're really commercial activity and you have shareholders that are counting on, profiting from the business at large, then you want something that has a high rate of return basis, a large quantity. In other words, you are in a top tier. And that's the situation that may exist with this company. And I have to say may, because the negotiation on the licensing agreement that is proposed needs to be accomplished in order for this to be at, let's say, top tier type of situation.
Now I'd like to move to viewers' questions. And one of the first viewers' questions is about states making gold and silver legal tender and not subject to taxation. They're wanting to know, what is your perspective on the couple states that have done this? And do you think more or all of the United States will enact legislation like this?
I doubt all of them will, but I think more will. It's the right thing to do. You can't tax money. I mean, it's, like taxing a dollar bill. I mean, you really can't or shouldn't. Of course, gold and silver are not viewed by the establishment. I mean, really, if you go back and you look at Dr. Edwin Vieira, I mean, it's really on the books. I mean, Ron Paul has brought this up too, but I can't give you the legal argument as well as they can. Regardless of what the actual legalities are, the implementation is what I believe everyone needs to focus on. So regardless of the legal, it's already at law and you can do it anywhere. Regardless of that argument, take that to the side and forget about it. When you do implement it on a state basis, how do you implement it? And that's the real question to me. And that means that if you take a silver dollar into a Walmart in a state that allows it to be used as money directly, it's not very well or easy to accomplish. Whereas if you do it in a manner that's transparent, which means you would have a debit card, as an example, backed by precious metals, and the bank or the depository will debit out the appropriate amount of precious metals for the transaction. that becomes transparent and it works very, very well. I can say that with authority because it already exists. Gold Money has a card. There's a couple other situations like that. Peter Schiff has one available. Of course, I think he's with Gold Money now. But anyway, the point being, and there's one here in Spokane that a friend of mine started some years ago. And so that's the only way I see to implement it in a way that works for everybody. Because unless you're doing, let's say you're buying a used truck as an example. I mean, you could go to somebody that's friendly to the metals and negotiate it and use it as money, and which it is, of course, and everybody's happy on both sides. But that's a particular instance. Whereas you want to be able to utilize that availability or that law that's enacted anywhere and everywhere, the only way that I see or know of right now to do it is by having a debit card backed by precious metals, where the party that's making a sale doesn't really care. They're so used to the plastic running through a machine that that's the only way to implement it. And they're not even the wiser that you're actually using metal to make a purchase of any kind, from a cup of coffee all the way up to, let's say, an automobile or beyond.
Now, moving on here, this viewer is wanting to know about precious metal manipulation and when you see it ending. In their view, they're thinking that precious metal manipulation will not end until there's severe hyperinflation and when the dollar loses its world reserve currency status. What is your perspective?
Well, there's a whole chapter in the book, The Silver Manifesto, and, I really want to refer to that because today I just came back, from London recently, and I'm not as sharp as, I can be. And I'm sure there's critics out there who could make some comments in the comments section, but regardless of what they think of me, the argument's laid out more logically and step by step in the book. But when will it end? No one knows. I mean, it's been a real long haul for all of us that know that all manipulations end at some point. But I agree. I mean, basically, it's the physical market has to take over the paper markets, and that already took place in 2008. But unfortunately, it only took place at the retail level, not on the wholesale level. So until it takes place on the wholesale level, meaning the COMEX or equivalent LBMA, until it takes place in the commercial bar form, it's really not going to implement where everyone can see it. And then when it actually does take place, and it really has a couple of times, meaning that, for example, if you go back to Eric Sprott when he started the PSLV, when he bought the first 22 million ounces of fine silver, I was actually up in Canada in Toronto with him and some of his team. And when he made that purchase, the amount of silver delivered was actually dragging, meaning it wasn't put into the vault on the agreed amount time frame. It came in, some of it came in late, not all of it, some of it. And this was a very good indicator that it was, pretty much squeezing the market, that they were right at the edge of the envelope in order to be able to make good on the delivery. And so that was very interesting. And of course, he bought more, I think it was a year and a half, 2 years later, I'd have to look. And of course, based on the previous large purchase, and I think the next one was like in the 20 million ounce range, so pretty close, they came in lickety split. There was no delay whatsoever. And I actually believed that it would be even tougher to get because he'd already made that purchase and it kind of, got in the nick of time plus a slight extension. And so the next time when that size purchase was made, that it would be more difficult to accumulate and bring it to him. And it's not the case. So that's what we're looking for. It would be something where there's a delay or an excuse or a cash settlement or something that might not be readily apparent in the financial markets. And of course, the mainstream financial press would probably make a great argument for why it was settled this way, or both parties agreed that they decided to cash settle or whatever. And you have to kind of read between the lines and look very closely to see what was really going on. But I do believe ultimately there will be some repercussions in both those markets. I used to favor that it appear in the silver market first because it's a smaller market, but I'm not so sure anymore. I think it could appear in the gold market. You got to remember that silver is 70 times, really more than 70 times the volume, with the ratio of about 70 to 1 to gold. Gold's actually denser, so it takes less space per unit than silver, although you could argue they're approximately the same. But the idea is that there's a lot more silver that's held by institutions, large investors, funds, home offices, pensions, et cetera, that buy into the silver story that don't own it other than on paper. And then there's always the possibility that some of that is actually just held on paper only and doesn't exist. It's just a hedge situation on the price of silver, but not the physical metal itself. And because of that fact, there's probably less of a squeeze potential that there would be in gold, because gold is, pretty small volume per unit price. And that means that a lot of the gold that's out there is actually held physically. Although there's a lot of paper gold, I'm not suggesting otherwise, but I think there's less of a ratio of physical to paper on the large size quantities than there is in the silver market.
Before we let you go, I think we have time for about 2 more viewers' questions. Now, this viewer is wanting to know, what do you think silver equities will do, like the price of the stocks for silver mining companies? What do you think they will do if the stock market crashes again?
Well, the equities go down. I mean, stocks are stocks, whether they're gold stocks or, retail stocks or consumables or whatever. The idea, though, is like in 2008 during the financial crisis, the first things to come up were gold, silver, and the mining shares. So on a V bottom or a huge move down, they rebound very, very quickly. However, if it's kind of a long, dragged out kind of a bottom where it kind of just grinds lower and then stair steps down and then goes sideways and drops and then goes sideways and drops and you get the staircase down, then in those type of bottoms, or those rounding bottoms, it's much more difficult to anticipate and know what to do. So it really depends on the market conditions on what the correct strategy is. But the point the question you're asking is, when things go down, do gold and silver and the mining shares go down? The answer is yes, they do.
All right. And for the last viewer's question, this is more about the economy. Now, this is from Ralph, and he's wanting to know, what are the ramifications for the national economy when Illinois and also Connecticut, New Jersey, and California claim bankruptcy and cease to honor pensions?
Well, this is the reality that we're living in. This is why this idea, and this is my opinion, not fact, that you're not responsible for anything. In other words, your health is based on the healthcare system. Your wealth is based on a stockbroker or some type of financial planner. All this pushing off your own personal responsibility. Your retirement is based upon a pension fund and all these things. And really the reality is, and what made America great in my view, is that, is self-responsibility. You have the ultimate responsibility for your own life, be it in your health, be it in your wealth, be it in what your physical condition, regardless of what the experts might say or do. It was up to you. And this is the reality that's shining through very, very clearly to everyone to see. And that is that you need to trust what you trust the most. And that is basically the principles that make your life gives your life meaning. I mean, you were with me in Las Vegas, I believe, on one of the freedom lectures I did for Carrie and Ian down there. I think you were there. But regardless, the point being, look, this is further inference into the fact that you cannot depend on others for your own well-being. You have to stand up and take responsibility for yourself. And that's why a lot of people in the precious metals sector use it as a hedge. The hedge being that if your pension does fail, you have something to fall back on. If there is a bank run or a bank problem or a closure, you have something to fall back on. I mean, it's the ultimate money. It's been that way for thousands of years. It doesn't mean you have to have all gold and silver. I don't teach that or preach that. The point being that you need to have it at some level, and you have to determine what that level is appropriately for you. It's very sad. It's going to continue. It's been forecast by many of us for a very long time. And now that it's manifesting, a lot of people are going, oh, my, look at that. I can't believe it. That's taking place. Just like the real estate debacle. I mean, I wrote an article in 2007, and a gentleman that was a huge real estate investor thanked me, and thanked me because of a public domain article that I wrote about the real estate crisis that was up and coming. I did it in 2007, where it actually began, but of course it manifests fully in 2008. And this particular individual was able to get out of the real estate market basis my article. He probably read several more. I'm not going to put it all on me, but I can state with authority that he did, write me back personally and thank me very much, because he was such a believer in the real estate market that, it can only go up, et cetera. And of course, the contrary was true in all markets. All markets, gold, silver, of course, go up and down. So we're seeing the market of faith in others to take care of you has hit an epic high some time ago. And the reality that others can't take care of you, you are responsible for yourself, is coming to the fore more and more, and it's going to accelerate.
All right. Well, David Morgan, thank you so much for joining us today. Before we let you go, did you want to share with the viewers any last thoughts you had and where they can find you online?
Well, just themorganreport.com. If you want a good overview, there's another website called richesandresources.com. You can get that old report, which is a pretty good outline on the resource sector at large. And, we always encourage new members, but the Morgan Report isn't for your basic brand new investor. And really, it's geared for somebody that's already a seasoned investor that's done some investing in the past and wants to specialize in the resource sector. I mean, that's what it's aimed at. It's not for somebody that's brand new. And I hate to move between sectors or make it a requirement. It's not. It's open to anybody. But really, unless you're an active investor with a fairly good net worth that's in market savvy, it's really not a paid report. That it serves everyone. It serves people that really have to need to hedge, want to hedge, you want to have some good thinking to help them make their decision.
All right. Once again, David Morgan, thank you so much for your time.
Thank you, Elijah.